Hey, greetings. Dr. Jeffrey Scott here, and this is my Market MRI Pro update for Monday, February 9th, 2026. Um, Market rebound continued today with some improved breadth as most of the indices ended higher. We'll take a look at the markets, which was a fresh outcome considering that they traded lower during the pre-market session. Even Bitcoin rallied today from the pre-market lows. Again, my name is Dr. Jeffrey Scott. I'm the Market MRI Pro at gmail.com, Google Group Top Down Trader, website marketmripro.com. As always, these sessions are for educational purposes only. Anything I talk about should be taken in the spirit of education, not investment advice. The intent of the video is to demonstrate the tools of top-down analysis and how I apply them. Trading involves risk. You and you are solely responsible for any investment decisions you make. I may own or intend to buy or sell any stock mentioned. Trading stocks and options should be considered risky. Always consult with your financial advisors. And I've got tools in multiple platforms. My Google group's called Top Down Trader. It's the only mailing list I keep. If you have interest in what I talk about, you want more information, get discounts on my products, get invited to private sessions for education, sign up. You control your entry and your exit. Just go to Google Groups, sign in, go to Join Group, look for Top Down Trader, no hyphens, and let me know how you want to be contacted. Busy week. Not much happened today except for a bunch of Fed heads, and the markets finished mostly higher today. We'll take a look at that in a few moments. Um, on Tuesday, tomorrow, we get the NFIB optimism for January, employment cost index for the fourth quarter, and then we've got some delayed import pricing, retail sales, etc. And then we've got some more Fed heads. So not a whole lot on Tuesday. Wednesday, we get the 1 week delayed U.S. employment report, more Fed heads, Thursday, jobless claims and home sales, and then we get our first look at January inflation on Friday. Earnings are a big week this week. I'm doing this early for me, 5:34 p.m. I'm at home and not sure I'm going to have time later, so I thought I'd get through with it. So haven't really looked to see what the big movers are. I know Credo, I saw the ticker looked like it had a nice session. So obviously be aware that we just had earnings. Tuesday we got Coke, CVS Health, Fiserv, which has really performed poorly. And then after the close, Robinhood. It'll be interesting to see since it's so often linked to the sentiment on Bitcoin. It is a judgment call to hold stocks over earnings dates. It is bad judgment to not know when your stock's earnings date is scheduled. For more information on anything I talk about, my style of trading, anything you want to ask, reach out to me, marketmripro at gmail.com. I will be more than happy to answer any questions you have. For Market MRI Pro customer support, hit coding at marketmripro.com and consider joining Top Down Trader Google Group. I get a few emails about possibly are there free trials available of your software. So just to let you know, and I can only really talk about Top Down Trader. To use Top Down Trader, if you're not a current subscriber user, you go to the Windows Store. Actually, it's called Market MRI Pro, not Top Down Trader. Come on, Jeffrey. You go into the Windows Store, you go Market MRI Pro or Market MRI, and you'll pull up Market MRI Pro. Now, I've already installed it because, hey, it's my program. It's going to offer you a 3 days for $7.99, I believe. If you decide to do that, go through it, sign up, pay your $7.99, and then email me at marketmripro.com with your Windows ID. I don't care about your password, but with your Windows ID. I will then hook you up for another 3.5 weeks, 4 weeks, so you'll end up with a 30-day trial for that $7.99. If you want to subscribe, then you can subscribe before the end at the lowest cost that I offer during your period of time. So if anybody has interest, just let me know. All right, how did we do today? Bitcoin actually opened down 1.42 and closed up 1%. That was a nice reversal. Bitcoin still down over 9% over the last 5 trading days. Before I even look at the ETFs, notice they all closed in the upper part of their range. To me, that's bullish. Qs were up 0.77, Russell 0.69, Spiders 0.5, and the Diamonds 0.04, the laggard on the day. Dollar was down 0.81%, and volatility was down 3.58. On the new highs minus new lows for the NYC or the NASDAQ, and I like looking at 12 months, we can see above 100 on the NYSE, and we moved up to 57 on the NASDAQ, and the number of new lows on both of those reduced. So that's an improvement. If we look at participation, only 46% of the stocks in the S&P 1500 were up today. That was kind of disappointing. 52% of the NASDAQ, 53% of the NYSE. So I guess if we add up all those numbers I just showed you up here and down here, that's a slight improvement in breadth, but it wasn't a rip-roaring day like Friday where we saw 70 or 80% of the stocks up in the market. We can see that the number of sectors and industry groups are less than the prior trading session across the board. If we look at the S&P 500 sectors, we can see the leadership was tech, materials, communications, energy, and what the laggards were was healthcare, finances, and staples. A little bit of rotation back into the tech trade, perhaps. And if we look at what the leadership was, it was silver, gold, uranium, copper, blockchain, software, clean tech, metals and mining, cyber, telecommunications, video games, cyber, AI and robots, and all these are up quite a bit. Data center up 1.7. Very few laggards on the day, and you can see the laggards were retail, construction, transports, and Chinese discretionary. So another strong day in the U.S. markets. If we go to the timing briefing, we could see on the weekly, and we just look at the green and the red underneath the charts. We are in a buy signal on the weekly on all the spiders, diamonds, and Russell. The only thing that we're not in a buy is the Qs. I will point out that the Qs had such a strong session today that they did close up above their WMA, which is nice to see. If we look at the daily, which has been, let's go back to daily. All right. If we look at the daily, you could see that we flipped to a buy on the spiders, flipped to a buy on the Russell, and we're lagging still on the Qs. So right now, we are in 3 weekly buys, 3 daily buys, and 4 monthly buys. I can show you that real quick. So I think we are improving. I think this is a pullback in an uptrend, and it certainly appears to me at this point, see all these are green, and this is the monthly. It certainly appears to me that we are in a uptrend with a pullback and not switching to a downtrend. So that's exciting. If we look at the market ETFs, again, I think they look pretty healthy, but with a big caveat. So here is the spiders off the low, a beautiful run. Once again, we pulled into the 100 as we did back here in November and rallied. Now above even the 21-day EMA and the 17-day simple, closing just off the highs. I love it. To me, that's a bullish move. What I don't love is this. It looks like, at least over the last 10 years, all years, and 5 years, that we go up for a couple more days and then we pull back. So we might be getting to a seasonal high soon, so that cautions me. And that day that it pulls back looks like the 17th. All right, let's take a look at the NASDAQ, the Qs. Not as good. It's certainly been in a kind of, could argue almost, I'm going to mess this up, I promise you, but let's just see what happens. Could almost argue that we've been in a trading range here. False breakout here. and that we're still in that trading range. So I'm going to leave that there because I think that actually reflects reality that we are trading sideways and we could not take out this prior high back here on this date here. And again, notice what we have coming up, a little rally and then a pullback. If I look at the diamonds, kind of look like the spiders, don't they? Nice steady uptrend, big move today, and guess what I think we're going to have is, um, since we closed up, we have an all-time closing high and all-time trading high today. Very exciting. Diamonds look good, but run up until about the 17th and then some seasonal softness. And then the Russell, which sent to all-time high here, and that was like a top tick and a sell-off with a shooting star. Um, Not far away, strong above the moving averages. Just the only concern being this seasonality picture. Doesn't mean we're going to do that, but just to be aware. The VIX, I don't like the VIX. It continues to go up this trend line. And even when the market has a couple of good days, the VIX is still elevated. That to me just defines that we have more risk than we might feel. And if we look at seasonality on the VIX, just as if the market rolls over on the 17th, the VIX hits a bottom and goes higher. So I think that's one thing to be careful of. And the dollars sold off hard today, which will probably be reflected in commodities down 0.85%. They're not consolidating here. They might be consolidating at a low, but the key is they're consolidating at a low with an earlier, if we go back to a year ago, January 2025, we set at least 52-week highs were much higher than they are today. If we go and we look at those commodities, these things have a life of their own and they stay stronger longer than many people would expect. Gold seems to be wanting to run again, and it's got seasonality that's flat to positive going forward here. Big move today in gold, up 2.5%. The weak dollar certainly supporting that. Silver, I thought it might hang down by the 50 longer. Still don't trust it after the drop it had, but it was actually up 8.34% today. Oil making a run, um, a little bit higher today, up 1.34%. And you could see going into March, it's got some really strong seasonality. And while natural gas just decided to go back down and be dead to me. Now, I don't know what a shooting star candle means after a sell off, but it means it failed an attempt to go higher. If we look at the 10-year, you can see it was actually down 0.24%. The 30-year was down 0.19%. Both failed after gapping up at the open and opening higher. Again, as I mentioned yesterday or over the weekend, the fact that we don't see a yield rally here is great. It means bonds are holding up, and the bonds are, I think, saying that they're okay with the new Fed choice. And why does the bonds matter? Because that's really the smart money. Buckets show me that we came off the overbought on the NYSE and the S&P 1500 and the Russell. We also eased off the higher oversold levels, kind of getting bullish neutral on the NYSE and the S&P 1500 and kind of mixed on the Russell and neutral bearish on the NASDAQ, all of which improved from their prior posting over the weekend. Market breadth, a few new things today. New highs on the NYSE, woohoo. I mean, it is hard to call bottoms at a top. Yet the NASDAQ did have a beautiful recovery here and traded higher again. My guess is we go on to new highs, but I'm continuing to watch it. I am not forgetting that we've recently had Hindenburg omens on both of them. We had a bango today on the NYSE, which is just a measurement of exuberance. We could see new highs minus new lows. AD lines and up-down volume were positive on both indexes. And the number of stocks above the various moving averages are not at any signal point, and we're positive on both. When I look at the market breadth of 13 weeks, which is a new high, 13-week new high, new low, 0.74 on the spiders, 0.82 on the S&P 1500, zero point 0.6 on the NASDAQ, 0.75. I could comment about how fast the NASDAQ has recovered, but there's no signal here, no obvious problem. Um, I'm wondering if the AD is leading me on the spiders as we're hitting new highs on the AD line, and we haven't hit a new high yet on the spiders. That might be bullish. The same thing could be said perhaps on the S&P 1500, but not on the other two. If I look at my sector timing non-ratio charts, actually let's look at the ratio charts first. Pretty obvious what's leading on the ratio charts and what improved today. So let's wait till we flip to that. Okay, we can see materials doing great. We can see energy doing great. Staples weakened a little bit, but still outperforming. Technology's got some green shoots. Industrials look great. And look how weak discretionary is. Healthcare selling off. Financials weakening, and communications came down a bit. Now, I like looking at the actual charts, not ratio charts. And so I actually created timing models for each of the things that we're going to look at here. So I'm going to grade everything A, B, C, D, and E. A, if I really think it's doing great, I might want to buy it. B, it's improving. C is neutral. D is in a sell signal, but not bad. And E is selling off hard. So Bitcoin, I upgrade from an E to a D. It had a nice update, as I said, reversed from below the prior close and closed higher. That's bullish. I'm still in a sell signal. I can't even give it a C here. It's got a lot to prove, so I would give it a D. If I look at technology, trying hard to get back up, I'll give it a C. It's still in a sell. I'm still not chasing after it, but some of the data center related tech names actually looked better today. Now we look at discretionary, and I give this a C to a D, languishing way below the moving averages in a sell signal. Next one to look at is communications. This is a C. Sell signal going sideways at the moving averages, not anything to do with it. Here's an A player. Industrials in a big move up, probably starting to get extended. And you could see here that the high jump look below is at 100. So it's an A, but I'm a little worried that it's probably getting a little bit ahead of itself. Financials, a C. It's got a buy, but it's stuck in with the moving averages going sideways. Energy is another A. Look at this, beautiful straight line higher. Materials, B to A to B, probably B plus, A minus, still a nice uptrend. This pullback and struggling today did hit all-time highs, or at least to our observation period. Here is real estate, at least a B, looks like it's getting ready to take off. Utilities, kind of a C going sideways. Staples, A minus, only because it was an A until today it was down, but still leading it and higher. Healthcare, a C, sideways move at the moving averages. And there's Bitcoin again. I also like to look at some key stocks. Now, the other day we looked at the contra ETFs, but with the markets behaving here, I don't think there's a play on the contra ETFs. So Amazon, is it trying to become a D from an E? I don't know. This is actually a negative day, down another 0.76. Really was not loved after its earnings dates and after its CapEx announcement. Apple, I'd say it's a B. I'd owned it, I'd still be holding it. It's above the moving averages in a buy signal. I'd like to see a green before it starts to go higher. Google, even though it's now in a sell and it's technically a C, I'm thinking that it's found support at the 50, and this might be an interesting place to start accumulating. Meta, finally a bounce after pulling back from its post-earnings euphoria. Unfortunately, it's sitting right below the 200, so I'd probably give it a C until it breaks above. Netflix gets my failing grade. It cannot get above the moving averages. You've got a 30-day WMA and the other one's a 21-day EMA. It continues to be stuck in an arbitrage play. Tesla maybe getting close, probably approaching D to C. Got to get above the moving average and really above the 50 to make me interested. Long term, I think Elon is the Einstein of this generation. And Nvidia had a strong session today, up 2.5%, came off the highs. But I'll give it a C, and I think it's waiting for its earnings date before it makes its move. I'm short some 230 calls, which when I bought them a year ago were expensive, so I'm hoping to see them expire, but I'd like to get closer to 230 since I'm still long the stock. Microsoft, I'll give it a D minus. It was an E like Netflix, but it actually had a positive day today. A big move percentage wise, but boy, it's got a lot of overhead supply to clear. Next item is Labu Biotech. I bought back a little piece. It's hard for me to ever be out of biotech since that's the world that I live in. Holding at the 50, which to me is not a bad place, but right now it's a C, C to C plus. Pharma holding up very well. Either give it an A or a B. Looks strong. Data centers A plus. It's off its highs, but two really strong days. And if you look at what was working today, a lot of them were in the A category. And here we have defense, which really disappointed and has pulled back. But what's interesting is Howmet, which is the one that we were playing, which pulled back hard, had a nice strong day today. We talked about going back into it over the weekend. All right, so that's that. Now, 22 minutes in. I hope you have a good feeling about what's working and what's not working in the market. If I go to the JS layout and I go and I look at the top down and I look at percentage return today, and now I'm not looking at the S&P 1500 stocks or 500 stocks. I'm looking at a much broader base of stocks. And the leadership, materials, tech, and energy. These are the industry groups in just those three sectors. And these are the top 10, too. Now, one of my picks for tonight that I liked a lot is in the gold category, but you could see it's heavily represented by metals, other silver, gold, uranium, copper, and aluminum, as well as industrial materials, one energy, electronic gaming, communication equipment. So I went through these, and one of the things that I noticed was Credo looked great. I believe this is up. Is it not up on earnings? But this one had a big move today, and I looked at it over the weekend. Earnings are March 3rd. It's going to be 78 cents versus 25. Even if there's no surprise, that's a 200% return on a stock that has a multiple of 39 and it's in the right space. Um, High-speed connectivity solutions for optical, electrical, Ethernet applications, integrated circuits, active electrical cables, chipsets, um, can be used in data centers, and that's kind of why I think it was up today. Might be an interesting buy point, be safer over here above the 50. But if I went through the list, I just ranked them by the number of up, down dots. Something happened with Valaris today, big move. What do? Contract drilling. Did they announce a contract? Oh, they cheated and they had their earnings different than we thought they were. Were they they're being bought out by Transocean Rig? Well, we don't play arbitrage. So the next one on the list, OCC. A little breakout here above the 50. Optical Cable Corporation. I believe this is an IPO. Maybe it's not. I didn't see a whole lot of information on it here. Hence why I thought that. When are the earnings? Probably don't have that either. All right, so I'm flying blind on this one. I don't like the fact that it's well off the highs. I do like the fact that it had a squeeze, a momentum breakout, relative strength at OBV looked good, and breaking out even above the 50. BGL, blue gold, not the gold pick for tonight. PZG, Paramount, Nevada gold, really cheap gold play, but rising. TRX, another gold play, so you're going to see a theme here. Vista Gold, cheap gold play. What's UI? Ubiquity, expensive stock. What do they do? Networking, distributed, IT, service provider. Sounds like stuff that can be used by a data center. I kind of an interesting base and a huge breakout. Take a look at fundamentals. Earnings came out on the 6th, which would have been Friday. Had a significant surprise, 70% growth rate. Looking at $3 versus 228. So that's a 76 cents. That's our 30, 40% growth rate. Multiples 58. Had big surprise on earnings the last 1, 2, 3, 4, 5, 7 in a row. Surprise on revenue. It's expensive. NUP, another low cost metals play. So one way of doing this is I isolated the top performers and ranked them. I could have ranked them by percent move. I could have been ranked them by, excuse me, short, intermediate, or long-term momentum, 2, 5, or 13. Here we're just looking at them based upon number of impulse indicators. Now, that's how I would look at this from a bottoms up, and we can get a sense of what's working. I also like to look from a tops down. And I mean, this is a tops down rather. I also like to look from a bottoms up. So if I go into my impulse, I could start with the A plus scan. The A plus scan requires two momentum signals in a row, and that's these two blue dots here. Um, Relative strength breaking out, volume improving. What's the high? Now this one looks well. This was the pick extended, except it's I guess it's extended. But Alamos Gold was one that I was going to look at. It is extended. I might look and see if I can find one that's not as extended. But if you got out of gold with the gold correction, there's probably a gold stock waiting for you. EGO is one that I've owned in the past. I got stopped out. Maybe it's time to get back in. The stock that I like going into tomorrow is ALAB, ALAB. ALAB earnings are due tomorrow. I just want to make sure they didn't come out tonight. ALAB had a big move today on the improvement in AI software. ALAB was a hot IPO of the recent era. And let me just check on my briefing.com, which is what I use for news, ALAB. Let's search. I don't want Allen, I want ALAB. Um, nope. Guess earnings come out tomorrow. So I wouldn't open this until earnings came out, but I'd be watching closely. And the reason I'm watching it, first of all, earnings are going to be 51 cents versus 37. So 14 out of a 37 is about 35, 40% growth rate. And it's had lots of surprises. But I really love the pattern, pullback, sideways move, and breaking out here. There's your double momentum signal on good volume. There's your relative strength breakout, your OBV. Other things that looked interesting to me, there's a number of things here. Wolf, which is one of those bit minor plays that I think has got a data center story as well. And probably wait for it to take out that high. But it had a huge move today, double momentum. Earnings are not out till later in the month. OLED, kind of a pullback here. Yeah, it's got the double momentum, but doesn't look that exciting to me. Another way to look at that was my A plus scan, my A scan. Um, APLD, I already own this stock, had a nice breakout today. Earnings are already out. Next earnings are April 13th. Again, had double momentum out of a squeeze, relative strength at OBV. I have found over the years that having two momentum days in a row, especially in a stock that's not extended and in a squeeze, can often lead to a big move. Lunar, I'm not in any space plays right now. This might be one to look at. Products and services to support sustained robotic and human exploration to the moon, Mars, and beyond. LUNR, lunar machines, pulled back to the 50 and broke out today. Earnings are not to March 24th. Relative strength at OBV look fine. And then lastly, we developed a scan during the last web session on trading. And I took the stocks from the scan. Let's just do it again. There's 410 stocks there. I created a list. Let me kill the list just to show you why I'm so excited by these stocks. I, I took the ability to create your own scans, showed people how to do it online, and I ended up creating this scan. There's a 410 stocks in the scan, so there's too many stocks, but some nights it only has 5. Just tells you it was a strong day. Now I'm going to take those, whoops, try that again. I'm going to highlight all of these and then try not to touch anything. Right click on it and add it to the new list. So now when I go to that new list, it should have 410 stocks. It's loading it. Guess I can give it a couple seconds for it to load. But what's really impressive about these is when you do a group list on it, it goes straight up. I know that Praveen was working on this feature, so yep, they're there. Well, only got 95. Yeah, I haven't figured out why they're not all coming, so we'll get this thing sorted out. But what I thought was remarkable is when I did bring over the complete list, and again, I don't know why we're not getting the complete list. When we did a view of what the index looked like, it was a rocket ship, and it still is. And I'm thinking if the markets are still kind of just starting the move after pulling back, what kind of stocks have been in this kind of an uptrend much quicker? And that might be the kind of stocks that I want to be fishing in. So I've already taken a look at these, but there's 410. Several of them I already own. AXTI, I think I'll have to profile this one in an upcoming educational event on how I played the options on this. But this one is just broken out to an all-time high after pulling back to the 50. They're not all going to be trades for today, but I think it gives us a nice perspective of what's working right now. So we'll get that one copy piece working soon, and we'll spend some time looking at this. I'm building some more scans from this, tied to specific industry groups or sectors to allow you to do some combination top down and bottoms up. If you identified today, for example, that industrials were hot, then we'll have the ability to take this scan that I'm using here, and then I'll have it preset so you'd be able then to say, well, show me just industrials. On that note, I think I'll say goodbye. Hope you have a great day in the market on Tuesday. I'll be doing the same thing Tuesday night. I'm going to try and get these out earlier because I do like spending time with my wife. Just don't tell her that. She won't believe you. And sometimes doing these things at 9 o'clock interrupt our evening. So I'm going to try and get these done earlier. One of the advantages of Market MRI Pro is that the updates are already done at 6 o'clock. Take care, everybody.